Hi, and welcome to the morning meeting. I'm your host, Julio Briones, and this is the number one show, at least in my opinion, where you're always going to be able to find information on how to not just grow, but start, operate, expand, and learn about your home care business, especially as it relates to the private pay market. All right, so one of the interesting things that I get asked a lot, and this is just the same from somebody that is starting out their home care agency, or somebody who's got a actually I got this question a few days ago from somebody who's got a $4 million private pay agency that's looking to get into other businesses. And it's about business credit. Just because you're making a lot of money doesn't always mean you understand your finances. And in the home care space, this can be especially difficult. But I'm not a licensed professional, so I have a hard time answering this stuff sometimes. So today we have Robert Puma Richards. He has been gracious enough to come onto the show and talk to us a little bit about his story, about how it is that he got to where he is today. And for those of you looking, he's got a lot of home care experience. CALA means a big deal if you know it, familiar with the industry at all. So we met not too long ago, and as usual, I try to bring you on guests that have active working knowledge of the senior care space, so that you don't just get somebody as a talking head that doesn't know what you're going through. So, welcome, Puma. Thanks for
Thank you.
joining
I
us.
appreciate it.
Yeah.
It's a
So
great opportunity. Thank you.
yeah, no, thanks. We really appreciate you taking the time to come on here and educate us a little bit on business credit and some of these typical pitfalls. But before we get into any of this, I hyped you up enough. Let's talk a little bit about you like what brings you here, what's your own journey, and explain to us how you actually managed to find yourself in the home care space.
Yeah. I was a financial planner for over 23 years.
Hmm.
Had my own business and saw that the business was changing. I was spending more time on compliance than anything else. It was a mom and pop business, and I had gotten burnt out. I saw that it was changing, um, and so I sold it. And as I was deciding where I was going to go and what I was going to do, I played a lot of softball, and one of the ladies on the team was a nurse for a big hospital in home health care. And we got talking, and I did some research, and I ended up buying a home care franchise
Oh, awesome.
in my hometown. And we did fantastic. Grew it tremendously. I loved it. It took me a little while to get acclimated because
Mhm.
going from financial planning to home care is
Oh,
is
that's a
it's
leap.
not
Yeah, yeah,
it's crazy. It's not even apples and oranges. I mean,
yeah,
it's
yeah,
apples and steaks.
yeah.
Um, and so it took me a while to understand the business and come to an appreciation of the home care space.
Hmm.
And what I found was I was getting involved with a lot of long-term care policies and companies, as well as a nonprofit. And this nonprofit owed me over $100,000.
Wow.
And uh, long story short, I ended up having to take them to court and settled for pennies on the dollar. But during that period of time, I found myself in a cash flow crunch. And so
Right.
I went to the SBA to get a loan, and at the end of the day, the SBA approves about 2% and funds about 2% of their loans out there. Most people don't know that, but at the end of the day, they're not a big lender as a lot of people think.
Yeah.
So then I said, well, let me go to my bank. I've been a long time client of theirs, and I'll get a loan from them. And about 14% of from the big banks, that's their approval rate. And so they said, well, you haven't been in business for 4 years. We can't touch you.
Right.
And so I then had to put everything on my own personal credit cards and take loans out in my name and everything else. And when you do that, especially when they're for business, they're at a very high interest rate.
Yeah.
And I was better off going to a loan shark, I think,
Probably.
than yeah, than going with them. And so that was fine. I was doing okay. Um, but then about 9 months later, it caught up to me. I had a couple live-in cases end fairly close to one another. I had a couple clients pass away, and I took about a 30% hit in revenue.
Mm,
And I went to my attorney and I said, "Well, what do I do?" And he said, "Well, you can fire your internal team and do it all yourself." Which at that point I was done. My
right.
girlfriend at the time wanted me out of the business. I was 315 pounds. I was like a hamburger away from a heart attack. And so I was mentally, physically, and emotionally, drained.
Right.
And so I said, what's the next option? And he said, well, the good news is the business doesn't owe anything and the business doesn't own anything. So you can just close the business and it's all on you personally. And then you can take care of it and
Right.
file bankruptcy. And so that seemed like it was the easy way out. And here it is 6, 7 years later, and I'm still paying for it because I've got higher insurance rates, I've got higher interest rates, it's cost me a couple jobs, and so on. And so, try and condense this journey here. I closed it. I went with Beata Home Healthcare. I was a director there. Went to Preferred Home Healthcare right before COVID, and unfortunately got furloughed, and they had stopped the program from moving forward, uh, building out their private pay piece. And so I said, well, I don't want to sit home during this furlough and not do anything. So I went and got my CALA so I could speak the language and market to
Mm-hmm.
the assisted livings. And my journey took me there, and I was an executive director in the height of COVID at an assisted living and everything. And I just realized it wasn't for me. And
Right.
so um, I had been on the side doing, I had fixed my credit, fixed my girlfriend's credit, fixed a lot of her family and everything else. And I said, well, let me do this. Let me build a credit repair business.
Right.
And so when I did that, a lot of my clients were business owners, and they kept saying, "Well, teach me about business credit. I want to know about business credit." And I looked, and there's very little out there on how to
Yes.
build business credit, and the banks keep it that way because they want you to personally guarantee everything. This way, they can
Mhm.
go after you if you declare bankruptcy or if you have to close your business down.
Right.
And that's exactly what happened to me. And so I stumbled upon this company, Jay Galt, who's been around for 10 years. They've helped 42,000 businesses build business credit. And I became a managing partner with them, and I still have my credit repair business. But really, the thrust of my work is done with business owners and educating them on how to build business credit. And so for me, it's a true calling. I've loved always working with business owners. And certainly I don't want them to make the mistake I made. So I'm really out there with talking about my mistake and sharing my story so that they understand that there's another way, that there's a better way to manage their credit.
Yeah.
So I know that was I know
Oh
that was a
no,
lot.
hey, listen, it's part of the story, and this is the thing. I mean, I've seen a number of key takeaways out of your story. All right, like let's just starting from there. Like number one, it's an amazing journey, and really, I do sincerely appreciate you taking the time to share it with us, because people think that going into business, it's all fun and games, and it's like like if if you remember those old movies like Christmas Story, it's all fun and games till you shoot your eye out, and this is
That's
what ends
right.
up happening. I mean, a couple of things. Number one, I mean, if I would have known you back when you were struggling, I would have told you just call me. I would have taught you a great way to use your deposits to not crash your business.
Yeah.
And the other thing is like with you know with a lot of new business owners, I think using the cash register, the business as a cash register or an ATM machine, I think that's a big problem. That's actually, I'm going to say, for me personally, from my experience, what I have seen is improperly funded to begin with, or not understanding how to manage your personal, business, and credit. Your personal financials, your business financials, and cash flow, and your business and personal credit in order to grow your business. I think those are just probably the biggest pitfalls that people will find, of beyond all the other long-term shorting and staffing shortages and things like that. And another big one that especially in home care, because a lot of franchises, I love franchises to death. That's my realm. I love working with franchises. I think they hold a useful tool, but we're so litigious as a society that it tends to handicap a lot of franchise support systems. And this is why guys like me exist, because I don't have the same rules that they do, even though I understand the needs of the franchisees. And what they can only tell you is up to a certain point, and then you start hearing a lot of, yeah, but you got to contact your labor attorney, you got to contact your local administrative policies, you got to contact the board of nursing. Oh, we can't really help you with that, that's up to you as a franchisee. Oh no, that's a private business decision. So you don't get the real advice. Like, for example, one of the first things I would have told you when you started losing clients is do whatever you got to do. Look at it from an hour's perspective, not a client perspective, and make sure you've always got 2 hours in the pipeline for every hour active, especially the closer you get to 120 days, because that 120-day mark, it's crucial, especially with those big 24/7 clients. You start losing, they drop off after 120 days. And just a shameless plug on myself, you guys can visit my website and you can get an entire white paper that we put out on the pitfalls of seniors economy and your business. All right, it's really mind-blowing how quickly people run through their finances, and the impact it has on a senior care business. um as far as the rest of it, like, yeah, financing your business personally, I agree with you 100%. Not the smartest move, and that's why, a big part of why you're here. I mean, I recently, the height of COVID is probably one of my busiest times dealing with Chapter 11 restructurings, and with people that were going through Chapter 13, just straight bankruptcy. You know, simply because they got into a similar problem. Clients start dropping off. You still have caregivers to pay. Accounts receivable, you lose track of it for a minute. You get that 30, 60, 90, 180, 270 past due, and you're sunk. So now, I mean, one of the things I recommend to clients all the time is, because I heard you mention you went to these big banks and this low percentages. I mean, I always recommend to people, try to get yourself a line of operating credit. Yeah, I know most credit unions and smaller banks, which is where I recommend people go. Um, Most of them tell you 2 years to 3 years in business before you get going. But if you can get in early and start building those deposit accounts where you're just putting in that deposit and showing them that growth, will that help? That you're showing steady and healthy business growth.
It will, but what I find is that, if we break down business credit versus personal credit, or let's start
Right.
there.
Yeah. What's the big difference?
So your personal credit, you turn 18 and magically you're given a number somewhere
Right.
between 350 and 850. And that is based off of a whole formula that the credit bureaus have put together. It's
Mhm.
based off of the amount of income you make, the debt to income ratio. It's how long have you been at your current job, how much debt do you have, and so on. And you know, let's put it out there that anything under 650 is considered subprime. And
Okay.
I talk with a lot of folks that are, at 650, 675, and they're feeling good, thinking that they're on top of the world. But by a bank, by a lender's viewpoint, you're borderline or subprime at that point.
Hmm.
Whereas business credit, you could be in business for 20 years and not have any business credit. It's
Right.
got to be intentional. What do I mean by that? You mean that 7% of the vendors and lenders, the Home Depots, the Lowe's, the Staples, 7% of the vendors and lenders out there report good payments. So the problem is out there, who are those vendors
Right.
and who do they report to? Well, this is my little pitch at the J Galt is we've got a software program which has 1,300 lenders and vendors on it that give us their underwriting requirements as well as where do they report to. So we
Okay.
know that answer and we save our clients time and money by doing that.
Hmm.
But again, the system is stacked against you because when you make a late payment or you don't make a payment, 94% of the vendors will actually report it then.
Oh
So,
wow.
and the thing about it is it costs them money to do that. So that's why they're not open necessarily to just, report the good stuff. And and so the single greatest factor for building business credit is paying your bill ahead of time. Not when it's due, actually ahead of time. That
Okay.
will build your credit faster than anything else. When most companies look at your finances, they're just looking at have you made your payments on time or ahead of time. They're not necessarily looking at, yes, years of business is important for some lenders, but they're not looking for revenue. They're not looking for, any of those financial metrics until you get to the bigger loans. Once you get
Right.
to a couple 100,000 or $1 million, that's when they're looking deeper in. But you can't do any of that without any business credit. And
Right.
so when you're talking about going to a local bank versus a big bank, the local banks are definitely the place to go because you have that relationship with them, and if you go with business credit, it's going to weigh a lot more than a big bank will. Because a big bank, they've got their underwriting requirements, and they're not going to, you
Yeah, they
know,
don't deviate.
they don't care how long you've been there, how much money you've deposited, or late payments or whatever. It's very black and white.
Hmm.
So I always suggest, like you said, go with the local bank, and a smaller mom and pop, a credit union, or something along those lines, if you can.
Right. Awesome. Awesome. So now here's my thing. So let's say I all of a sudden right now we're gonna get off this call. I'm gonna jump on, the state, the state Department of Commerce, Treasury Department, whatever it is in whatever state we're in, and I'm gonna go and open an LLC. What's the first thing? I open my LLC, I got my EIN, I'm ready to rock. What do I do to start establishing credit?
Great question, because that's where the mystery begins, right?
Right.
And when you establish that LLC with that attorney and that accountant, they take you to that line and they drop you off.
Right.
They don't tell you how to do it, and so that's where we come in, because what we do is we first look at your foundation, meaning we want to make you think about it. You never show up to a date wearing sweatpants, right? Um,
Hopefully.
you shouldn't, right?
Hopefully,
Yeah,
yeah.
yeah.
Depends
Never
on the
know.
kind of date, but yeah.
But, does your credit look like you're wearing sweatpants?
Yeah.
Because when you apply for credit, whether it be a credit card or a loan, right? You're making your case to that underwriter about how fundable are you. And there's
Right.
over 120 factors that go into your fundability. And
Okay.
so it's really important to understand that having that foundation is important because the number one reason for denial is potential fraud.
Right.
So some of the things that I often see that businesses make mistakes on is they use a PO box for their business.
Mm.
Instant denial.
Right.
If you have, the Puma home healthcare at gmail.com, instant denial.
Right.
You've got to have a professional email. You've got to have a website. You've got to have your business phone listed with 411. Because what's going to happen is that underwriter is going to search for your home care agency. And if they can't find a website or the addresses don't
Mhm.
match up, they're going to say this is potential fraud and deny you. And
Yeah.
and and so you've got to have that foundation, that fundability um, established first and
Right.
fixed. From there, then you go to those what I call your give me accounts. Okay,
Mhm.
that might be a U line, let's say. What
Okay,
I
like the
love.
trade lines. Yeah.
Correct, correct. And so this is where you get into the vendors and start applying with credit. That's tier one. There's four tiers of credit.
Okay.
And and so the tier one, you might get $500, $1,000 credit line, let's say with Staples or
Right.
Uline or whoever. And what's important is you want to make the payment as quickly as possible. Go out, buy a ream of paper, a box of paper, but you've got to spend at least $50. Otherwise, it's not reported. Okay.
Okay.
So then they're going to report that to the Bureau, let's say. And when they do that, they're going to have a suggested credit limit, which is probably going to now be higher because you made your first payment. So now, within about the first 30, 45 days, you're now going from $1,000 to 2,500.
Right.
And once you do that for a couple of months, now you're able to move into the tier two, which might be the Wawas, the gas cards, um, and so on in there. And so that's where the magic starts to happen because at the higher two tier is when you can get into the lows, you can get into the CDWs, Home
Yeah.
Depot,
Your
and
Costco, your yeah.
exactly. But you're starting with net 30-day accounts, which is
Right.
really important.
Okay.
Um, because now you've got a 30-day kind of window to make the payment. It's
Right.
not most of these accounts are due on payment and everything.
Hmm.
So now you want to build that. So now you get a net 60, a net 90-day
Right.
window, and that's tremendous. In the cash flow
Oh
game.
yeah.
You
Yeah.
know,
That a net 90 is magic when you're trying to manage cash flow.
yeah.
Mhm.
I had a tech company that was building out their sales force, and he had to spend $15,000 on computers,
Yeah.
Apple computers, and I said, well, why are you using cash? You use cash, it's right out the door, and you've lost the ability to make money on it or to
Right.
cut that number down. So I said, let's go to Apple. Apple has a net 60-day account we can get with you. And now you've got 60 days to put those computers to work, use those salespeople to hopefully generate revenue in those 60 days,
Yep.
which they should. And now, hopefully, with any luck, you've paid it off by the time it's due because those salespeople have made money. And so that's really, when you talk about building business credit, it's not necessarily about going into debt. It's about using that, or what I call OPM, other people's
Yep.
money.
Yeah.
And just like as home care owners, right? We'll give people 30 days to pay their bills sometimes, or 10 days or 15 days, right?
Right.
Well, as business owners, we don't necessarily get that until you build that relationship up
Hmm.
and you build that business credit up. And
Right.
then, with business credit, you go from 0 to 100, okay, in the scores. So it's not from 350 to 850 like your personal. And
Hmm.
just because you're at 50 doesn't necessarily mean you're halfway. You probably aren't going to get approved for very much at 50.
Right. You
So
got to be closer to that 100.
you've got to be in the mid to high 80s. That would be like having a credit score of 825 or something
Got
along
it.
those
Got it.
lines. And once you're there, you can go to any bank. You can go to Ford, Toyota, whoever, and get those
Get
sign
the
and drive.
cars and
Yep.
yeah.
Yeah.
All right. Buy property, things like that. That's where it becomes a lot easier.
Lines of credit will come in, which are
Yeah.
so instrumental for
Yes.
the home care.
Oh, absolutely. Look, in many states, especially if you're looking into the Medicaid or some sort of government payer source, model. Some states, I believe it's Florida, to do home health. I'm not sure. I'm mostly private pay, but I was talking to a licensing consultant that I refer people to down in Florida, and they require 50,000 either in cash or as a line of credit in order to get licensed for home health. If you don't have one, you have to have the other. And $50,000 it's not something easy to come by for your average person. Not for your home care license, for home health, skilled nursing. I gotta be very specific when I separate the two. But like New Jersey requires a $10,000 bond on in order to do it, because you got to guarantee payroll. You can't have people walking around working not getting paid. So it's one of those things. It's coming or going. You need to have the funds available, so it's better to just build your business credit and have this money when you need it, not when not when the emergency happens.
Well, I share the story about Walmart all the
Mhm.
time. If you go into Walmart, you see hundreds, if not thousands, of products.
Yeah.
Walmart is in debt $50 billion,
Yep.
but you never hear about
Yeah.
it. 80% of those products are bought by Walmart
Right.
on credit from about
Mhm.
500 different vendors, and
Right.
they're bought with a 60 or 90-day contract.
Yeah.
And so, if you think about it, that gives them 60 days, and that's why they have the rollbacks, because they're like, I got to get it off the shelves.
Yeah. Yeah.
But
Because the closer to that 90th day.
absolutely
Yeah.
right. They gotta get it out there. And when they
Mhm.
sell it, now what they're doing is they're paying what they owe and they're keeping the profit.
Right.
It's very, very simple. And that's, as home care owners, that's what we should be doing, not, oh, payroll came in and
Right.
workers
And
comp
how
came
do I,
in,
yep.
and you're chasing. What I found was I was always chasing the bill,
Right.
and everything. And when you establish vendors and a relationship, you could put everything into one account and
Yep.
pay that one account out, one bill each month for almost everything.
Right. And that's actually on that note, that is one of the big pieces of advice that I give a lot of newer agencies. It's like, if you can come in the door well capitalized to where you have your lines of credit, where you have, even if it's a loan that you just put the money for payroll to sit there, use your operating funds to pay back those loans, to keep that line of credit low. But make sure that this way, when you're on that weekly billing cycle, it doesn't always mean the money's going to come in the same day when the bill went out. We're dealing in an industry where, yeah, in today's world, we can email a bill, but let's be realistic. Your average home care client is 73 years old, all right, and older. So when you've got grandma at 90 years old that's getting 24/7 care, she needs help to eat a bowl of soup. Do you think she knows how to pay with a credit card over an email? No, she's going to sit there. They're going to wait. Whenever she gets around to it, she's going to look at your bill. 15 days later is when you're finally going to get a check in the mail, if not longer, depending on, like, especially in New Jersey, some towns, the mail is notorious, where it'll take 8 or 10 days while it's just sitting down the block from you. So yeah, you got to understand that, you know, in accounts receivable in home care, and this is one big mistake a lot of people make, it's sometimes 15 to 20 days behind.
Oh yeah, and God forbid a client passes away, then
Yeah.
what?
Oh, yeah, then you're looking at 3 years of a estate of a probate court, before you get paid. Yeah.
Yeah, and this is such a great business. But
It
what
is.
what outsiders don't see or recognize is it's margins. You're
Yeah.
one workers' comp case,
Mhm.
negative case from being in the red in a lot of
Yes.
cases, and so margins are so important,
Yes.
in this, and managing that cash flow. And I'll tell you, the franchise systems, they try to teach you about cash flow
It,
management, but they
it's
don't.
they don't because there's a look. I mean, we can talk about that part of it all day, because there's a, like I said, we're just so litigious because so many franchisees. All right, and again, I was in the world of franchising for almost 8 years. All right, on the support side, actually building out the training platforms and helping, doing the on-site trainings and visits and everything to help the franchisees grow. It's tough because on the one hand, you have to be mindful of the fact that you're looking at it from the lens of this is a business owner who invested everything they have on a dream, okay? And they're trying to make it. Then on the other side, you have to look at it. It got to the point, like I'll tell you personally, I used to carry errors and omissions as an employee just because I can't tell you the amount of times I ended up going to a district court or to some other federal court in different states because I'll tell you an example of a situation that happened here in New Jersey. Was working with an office. Their employee was terminated for stealing. The owner was nice enough to not press charges, was just like, hey, we're going to let it go about your business, just you don't work here anymore. The employee went and got a lawyer, sued the owner, sued the franchisor, and because I was the one, and that was one of my offices directly, I got sued personally for it. Okay, because these lawyers, they're out to make a buck just like everybody else. I don't knock them. I have a lot of friends that are lawyers. Some of them are very nice, some of them not so much. It's like any other profession. But at the end of the day, there's a lot more to this, and there's a lot more liability at stake for these people that are helping you. So that's why you're absolutely right. A lot of them want to help. You have people who legitimately want to help you grow your business, but they are, they're hobbled by the law. And that's an unfortunate reality. And again, like I said earlier, that's why guys like me exist, because there's a lot that the franchisor just can't do. Even if they want to, they just can't do it.
You're 100% right. But when you look at a franchisor, they're in the
Yeah.
business of selling franchises and territories.
Yeah.
I mean,
Some of the bigger ones are.
and to grow yours, right? Obviously,
Yeah.
that they have an interest in there. Um, but it's challenging for them because they don't want to get sued, right?
Right.
And they got 50
Exactly.
states that are looking at them all the time, and potentially, dozens, hundreds of offices to kind of, you know, rattle around, not rattle around, but keep their eyes on. So it's a very scary environment that we're out there, that we're in, especially in home care.
Right.
It is only going to get more difficult, right? I mean, we can agree on that
Mhm.
as business owners,
Oh, yes.
is that taxes are going to go up, inflation's here to stay, the local environment at the state level is only going to continue to pass the buck on to the small business owners, you know, and you look at, and I don't
Mhm.
want to get political, but you look at
Mm.
what happened with COVID, right? I mean,
Yes.
I talk to business owners every day, multiple business owners, and the thing about COVID that really bothers most of them is they were forced to shut down because they were non-essential. Yet, Target, Walmart, Lowe's, they were considered, essential, and they were the big guys. And so small business owners really, suffered because of it, and that's why a lot of them had to shut down.
Right.
And I go back to, this is why you want to build business credit,
I
because the
agree.
average, when a business fails, it leaves the business owner with an average of $82,000 on their personal credit,
Yep.
and you don't want to chance your whatever goes on in the home care, and you just shared that crazy story, right?
Mhm.
But you don't want to chance your son's college fund or the house or any of that to what goes on in your home care agency.
Right.
So that's why you've got to untether your business finances from your personal wealth.
Okay. I'm sorry.
Yep.
I'm sorry, I just got a text as those I'm going through some stuff to try to sell my house, and my realtor actually just sent me a text. So sorry to interrupt.
I hope you got a bid there.
Yeah, but yeah, no, I actually agree. Again, I don't like to get into politics at all either. Um, you know, because this just isn't the platform for it. I mean, I'll happily have a politics conversation with you offline, but at the end of the day, you're right. COVID, it was devastating. I don't think a single business did not get impacted by it in one way, shape, or form. And I agree. That's like right before COVID and during COVID, as things were starting to ramp up, and a lot of these restrictions in different states started coming about, the employment crisis, everything started just mounting on top of each other. Regardless of which side of the aisle, I think everybody screwed up in politics. Both sides. But at the end of the day, what it comes down to is a lot of home care agencies shut down. A lot of people no longer exist because of that, because they didn't have the credit, they didn't have the just the business acumen to make it through. And I agree. I think probably could have saved an additional maybe 20-25% of the businesses that did shut down, had they just been prepared with their credit and and just a little bit of education on how to use it.
Well, theoretically, let's say if you had it all planned out and everything else and properly set up, if you had the Puma home health care agency that
Hmm.
shut down, right, and everything was in the business name, business credit, all of that, you
Hmm.
could open up the Robert Home Health Care home care agency in the same location the next day and not miss a beat. Again, if you had everything set up properly with business credit and everything along those ways. But most people don't look at it that way.
Right.
They get into this business to help people, to help seniors stay in their homes longer,
Hmm.
and then they get caught up, right, with workers' comp and liability insurance and time and attendance and this and that, and it just
Yep.
gets keeps getting shoveled onto the owner to take responsibility for all of this. And
Exactly. Exactly.
you look at what happened with COVID, right? I mean, think about all the testing, the PPEs that they've got to, now buy and spend money on. That
Hmm.
eats right into their, into their bottom line.
Right. I mean, and again, without the political discussion, you have some states that are much more overregulated than others. Like just on its surface, you have, as much as people complain about New Jersey, which I have my fair share of complaints, but the reality is in the home care industry, even though we are a licensed state, we're still not so terribly overregulated that you can't function your business. There are some states, you know, I I have clients out in California that do well, but there's certain services that you're limited from offering just because they have some of the strictest labor laws in the country out there. You have states like down in Alabama that you have to show a certificate of need just to open a home care agency. So all of these things, I mean, and that's a huge investment. Just to New York, they put the moratorium on licensed agencies that you again have to have a certificate of need, and that involves a lot of times, number one, having to hire people that know what they're doing with a certificate of need. You have to hire specialty surveyors in order to go and prove that there is a need. Then you have to go and get a team of lawyers to fight the state and your local competitors. So there's just mountains of things that you already have to deal with. And if you're doing all of this while trying to figure out your finances, while trying to figure out how you're going to grow your business after you won this battle, then what? And and this is one of the things I got to tell you honestly. I'm very glad guys like you exist that know what you're talking about with this, because otherwise it's people would be in a very bad way.
Well, the banks don't want you, again, they don't want you to know about this.
Right,
because they want to they want you to personally guarantee it.
right.
And so, I was speaking with a bank representative last week, and I, went through my spiel about why the three reasons you should be building business credit. And she said, "Oh, we got this great, product for business owners." And she's going through, and I'm like, "Oh, that sounds great." And then she's like, "As long as you have a better than a 680 credit score, you can get approved." And I said, "So, in essence, you've got to personally guarantee this, right?" And she's like, "Yeah, yeah." Yeah." And I'm like, did you understand anything I was talking about? The goal here is not to give a personal guarantee.
Right, right. And that's something that, people just you're right. A lot of people just don't get it. They really just don't get it. And that's why it's so important that at least with technology today, we can bring information to the people for them to better understand. So now, on the screen we have your website. All right. And please, if you're watching this, as you guys have already heard, anybody who's been a fan of the show knows I only bring on people that understand your specific plight, meaning that they are in the home care space. They know exactly what you're going through, and they understand how to fix whatever problem, and that's why they're experts. Get a hold of Puma. All right. If you don't have business credit, or even, I don't care if you've been around for 10 years. If you don't have business credit and you're not really prepared for the worst, this is the guy you want to talk to. As a home care agency, uh, former home care agency owner, he knows how to work with you. He knows what your needs are going to be to help you get your score where it's got to be and point you in the right direction as to what the next actionable steps are going to be for you to get at least to a point where you could sleep well at night, knowing that when that client doesn't pay the bill or two of them pass away, your caregivers are still going to get paid. All right. And let me tell you, as a person who has sat on 3 New Jersey state committees for the Labor Department and 1 federal over the years, I can tell you the last thing you want is the Labor Department breathing down your neck because you're paid somebody late, okay, or not paid them at all. I've been in the room doing my job as a consultant when I have seen federal agents come in and arrest owners for failing to pay their employees. All right, after court battles and everything else. It is not pleasant, and that stays with you for a very long time. Needless to say, what it does to your reputation. Your caregivers don't get paid once, they might forgive you. Twice, you'll never hire someone again. All right. Even after you got the problem fixed, it'll take years for people to stop talking about you're the agency that doesn't pay their caregivers. I've seen it, and a lot of times my recommendation, once that's happened 2 or 3 times, just change your name, rebrand yourself, start over. At least you're not starting over, you're starting with experience. You know,
Yeah, I mean, you're absolutely right. I mean, that for me, that was the incredible weight that I had to carry, right? And
right.
and as a business owner, it's like, oh well, good news. I made payroll, right? I paid out $50,000 in payroll. That's great. But then it's like, oh, the clock is ticking. I now have,
Yep.
13 days to before the next 50,000 is due,
Yeah. Yeah.
and that for me, that was why I gained so much weight. That's why I was so stressed,
Yep.
because you had to come out of pocket. And we talked about it. You don't get paid as quickly as you think,
No.
with it.
I mean, a scary statistic. If you're running a $1 million agency, you're doing that on about an 85% accounts receivable. That's it. That means 15% of your accounts, of your invoices, are going to take longer than your pay period to come in. And it gets especially hard because the expectation from caregivers today are that they want to get paid weekly. It used to be easier because you could bill weekly, pay every 2 weeks. Even with that 15% you were missing in order to cover payroll, it would start to trickle in and you always had overlap. But today, it's such a competitive market that you will have you'll have the reality to deal with of, weekly pay. If I send invoices out on Monday, the odds are I'm only going to get about 60% by Thursday. Most payroll is due on Wednesdays. So what are
Yeah.
you going to do? How do you fund that account? Especially if you're trying to maintain in a perfect world, it's a 50% margin. In reality, it's closer to 28 to 32, unless you really got your business running like a finely tuned machine. But as much as this conversation has been great, I'm really gonna have to cut it short. I mean, we could really talk. I'd love to have you back though. I want to be able to. We can make this an ongoing quarterly thing if you'd like. I'll tell you what. Anyone watching the video, leave a comment down below in the comment section here on our YouTube channel. Give us a thumbs up and let us know. Do you want a recurring visit from Robert Puma Richards to teach us about building credit, resources available, and really get you guys to get your business humming all the way across? All right, let us know. All right, any parting words, any final bit of advice before we cut this off?
Yeah, there's no better time than to start that business journey. It takes a better part of a year to build that credit and get it into the 80s. We guarantee at least $50,000 of funding. We've got clients that have gotten 600,000, and you
Awesome.
can't do any of that without taking that first step, and that first step should be today. So, but thank you so much for your time, and appreciate the opportunity here.
All right. Thank you again. If you want to get a hold of Richard, I'm sorry, Robert. I'm so sorry. COVID is still kicking my butt. Yeah. Go to
Puma.
rrichards.jgalt.io. We're going to have all his contact information, phone number, website, and email in the description down below. This has really been enlightening. I got to tell you, I wish I could keep this going for another hour. But, duty calls. So thanks for being here. We hope everybody learned something today. Don't forget to give us a like and subscribe. And if you really want to help the channel grow, YouTube keeps changing their algorithms. And if you're listening to this on the audio, same thing with iHeart and all these other platforms. Keep changing the algorithms. And now everybody wants you to share. So give us a like, subscribe, leave us a comment, and share this. Let other people learn from what you're learning. All right. Thank you so much. It's been a pleasure, and we'll catch you guys on the next episode.